Get back to business here. Marvell. We mentioned a big name company joining the buyback parade. They just did. $5 billion announced this morning. You don't own this name, but you do own Lam and KLA Corp. And there has been a long list of companies that have announced buybacks over the last couple of months. But you take this one first, and we'll go from there.
Long list of companies buying back their stock, except Berkshire Hathaway. That's the one that we're still waiting for.
I know, but we're talking about the chip equipment names,
I know, but
Joe.
that's important. That's important to mention because a lot of people always cite that and view that as a reason that he sees something within the marketplace. In the case of Lam, in the case of KLA Corp, the reason that you're owning these stocks, the buyback's good, but that's not the reason that you own these stocks. You own these semi-equipment names because they are fully participating in the build-out of the artificial intelligence infrastructure. And they're in the right place. They're sitting next to companies like NVIDIA and Broadcom. They have direct relationships with both of them, and they're seeing significant expansion in terms of profit margins and earnings growth. And it's one of the reasons why we have ownership of them.
Okay. Jenny, Uber's on the list. $20 billion announced August 6th. Charles Schwab, $20 billion announced on July 24th. As some look to this as a key catalyst for the market to keep going up.
Yeah, I don't think it should be a catalyst, but Uber is interesting in that it's not surprising. They have just enormous free cash flow, $9 billion this year, $10 billion, $12 billion the next couple of years. So it makes sense because they have been incredibly fiscally disciplined. So that one makes sense. To us, the Schwab buyback is a little more surprising. You need to remember that they only recently had a funding crisis on their bank deposits. So I would have thought that they might keep a little more dry powder. But then again, don't forget, you can announce the buyback, but you don't need to enact the buyback. And sometimes you get the credit for just the announcement. So, full thumbs up on Uber's buyback. Schwab a little more apprehensive. But you know what I did? I took a peek. This is a beautiful use of AI, by the way. I put in our portfolios and I said, real quick, please tell me which of the companies in the portfolio announced a share buyback and when. And about 25% of the companies in our growth portfolio have a share buyback in place that was announced within the last couple of years. And then over 10%, about 15% actually, in the equity income have a buyback in place that was recently announced. So it's just, there's so many out there. This list.
And you're saying it's not a catalyst?
No.
You're in the minority, I think, in that view.
That it's a catalyst?
That buybacks?
I don't think it's a catalyst.
Buybacks are a catalyst for stocks to go higher?
Not really. I just think it's a statement of management saying, I think my shares are cheap. We are showing fiscal discipline. We have a lot of cash. I don't think you should drive it up. I think it's just another layer of support in an investment thesis. But I wouldn't buy something just because a buyback is announced.
Well, I didn't say just because of
it's just a layer.
Buyback.
Yeah, it's just one of the layers of the foundation of an
investment. It's a catalyst in the financial sector, I think.
Maybe in the financial sector, but
Thanks.
for our stocks,
well, you don't think it's a catalyst for Apple, like to some degree? Sure, the stock's gonna have fluctuations.
Because Apple has so much cash, like
they
maybe
buy back
that
more
helps.
stock than anybody.
I don't know. What's the difference between a catalyst and a layer of support?
It's a put.
Is a put a catalyst, or is a put just a put?
The buyback is a put for Apple.
All right.
What do you think?
I don't get excited about it.
I would say that
obviously
I'm reassured.
We're still in a higher interest rate environment. We're not back in the pre-2020 era, and any acceleration in buybacks, which we're starting to see, I think is reflective of the very strong fundamentals of many of these companies. And I think it is a basis for the potential for multiple expansion if the market still goes up.
One more real quick. Electronic Arts. We did notice those shares were lower earlier. Google adding Gemini AI to its mobile games. You own EA. Josh just bought it last week. There's the stock down 3.25%.
And I take the other side of it being down 3.25%. You can make the same claim for Take-Two. Jenny's very excited about Friday. FC26 is coming out.
I'm pumped.
You are pumped about that. Battlefield 6 coming out on October 10th. This is a company that's achieving an 80% profit margin. That is a record profit margin. They're increasing their free cash flow. The bottom line is strong. The balance sheet is strong. And you have active engagement from gamers.